Hello traders, and welcome back to another video here on the Learn to Trade channel. Today we're going to do something a little bit different, and we are going to go through how we found the FTSE 100 or the UK100 trade, right? So we're going to start by, actually, I'm going to just delete everything, right? I'm going to delete all the drawings, and I'm going to take you through my thought process on how we found this trade. Now we're looking at the 100-minute chart, I know. So let's go again and let's look at the 4-hour chart. Right, the 4-hour chart doesn't tell us much, but if we look at the entire chart, I mean, we know for sure that we are moving to the upside, right? Higher lows, higher lows, higher lows, and we want to get onto that. Meaning that we want to find an opportunity to buy the FTSE, right? So right now our position is taking a little bit of water, but it really doesn't matter because this, this game is about probabilities, right? It doesn't matter. I mean, you don't have to be results oriented at all. You never have to be results oriented in the sense that you need not to focus on every single outcome of every single trade because there's a lot of there's a lot of things in the market that you can't control, and what you can control is where buyers or if strong sellers are going to step in, right? What you can control is your risk and the probabilities of every single one of the setups. So this is a high probability trade. Why? Because there's a lot of items on my checklist that have been checked. For example, the first one that I found was this. We are retesting back this strong level of resistance, right? So we were testing this level of resistance, and sellers were trying to break through, and eventually they did break through, right? But if you notice here, we were making higher lows, higher lows, higher lows, and higher lows. This means that this was a flat triangle, and we missed that breakout opportunity with a defined risk to reward. But it really doesn't matter because we found that the next opportunity at the retest. Now this is not strong enough just to take the trade. So we are going to continue looking for those checklists or those marks in my personal checklist to make it for a high probability trade. And the reason that I took the trade, right? So, so we are retesting back that level of resistance. Not only that, but we are trading inside of a bearish structure, immediate bearish structure. This one right here, which means that we are trading inside of a bull flag. That's right. Now let's add some Fibonacci retracement levels. From the lows of the move to the highs of the move, we have retraced, I reckon, about 50% or so. Let's have a look if we get some confluence, and right there. We have retraced back 50% of the move to that big and important level of resistance. So that's the third item on my checklist. Now let's add some indicators. I know that I don't use indicators, but I want to show you this. Right, the only indicator that I might use, or the only indicator that I might use, is the simple moving average on the 200 period right here. And on the I would use the daily and the 4-hour chart, and the 4-hour 200 simple moving average. I'm sorry about that. So let's add it, and then let's color it green, right? Actually, another color, just to red. Red is fine. So as you can see, we are retesting that 200, that 4-hour 200 moving average, and it's confluencing with that level of resistance and the 50% retracement. Now let's add some extensions. So we are right at the 161.8 extension of the first leg down, right? So this is important because these are some important bullish targets. Now let me just go ahead and move this a little bit, actually, to the right there. So we have a Fibonacci cluster of strong retracement levels where sellers might jump into the market, and strong levels where buyers might close their. I'm sorry, where buyers. Let me rephrase that because yeah, I was saying the contrary, right? So we have the 50% retracement, right? This is the Fibonacci cluster that I always look for. We have the 50% retracement, which means that this is the level that buyers are going to focus on to jump in long. And we have that 161.8 of the first leg down, right? Which are the first targets or the first targets to the downside, which means that this is the level that sellers are going to be looking to close their orders, which makes for more bullish pressure. Now, this is quite the setup, if you ask me, right? So let's go again and let's look at the daily, right? Let's look at the daily. And let's look for targets to the upside. Why my targets are where I put them, right? Recognize no, I think it's around the 7,000 or 6,900 level. I don't remember, but the thing is that you need to look in historic price action, and as you can see here is the level that buyers were protecting before that pandemic that pandemic crash, or the coronavirus pandemic crash, right? So it's very important to notice all of these things when it comes to trading, because it's extremely foolish, and you're going to end up burning money if what you do is just take trades here and there without getting the confirmation needed every single time. So yeah, I mean, this is why I am along the FTSE, why I sent that long signal. And remember that trades, it's plausible that we're going to get stopped out, but the higher probability trade or the higher probability of this trade is to the upside. Now, if we break with the previous highs again, we could have been a little premature to the trade. I admit on that. I mean, no one's perfect, and my entry seems a little premature because we did not break with this high. But nevertheless, we are still on that trade, and should we break with the highs, we will be adding on to this position to make it even thicker and have bigger gains, right? So if you have any questions, again, just comment on the comment section below the video. Send us an email. There's a link below this video where you can actually get all my signals. It's only £50 per month, and you get access to all of my signals and daily. So again, thank you, and I'll see you in the next video.